Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our free weekly video report for Wednesday, August 2nd, 2017. So, we finished our marketing stuff, got all that out of the way. So, I have some more time to do some videos, and let's get started. So, the market has pretty much gone nowhere if you're in the S&P. It's been pretty much down for the most part for the NASDAQ. The Russell 2000 seems like it's on a borderline crash, and the Dow Jones is doing nothing but making new highs, and that's all within the last 6 trading days. So we have the indexes that are diverging all over the place, and what it's doing, you're seeing on the financial news stations, they're giving you the party hats that the Dow hit 22,000. Nobody thinks the market's ever going to go down, but each day it's giving us a tell because the bulls are really just trying to move every other index on a gap up. And as soon as the bell opens and that first tick goes on a gap up, it's all out selling. And the Dow can hold things up for so long. Granted, there's only 30 stocks that are in the Dow, so it's not that hard to kind of manipulate things higher. But when you have out of the 30 stocks, only a handful are even pushing it up to where it is right now, it makes things really dangerous. And I'll go over that in this video. So really, the way that we look at things with sentiment timing is you have to look at the full picture to become a successful trader. And what that means is you have to know when the market is going to reverse. And we do that both on a say an intermediate term as well as a short term. So that the timing technical indicators that Woody has, they give you projections on when the market's going to when the trend is going to reverse, and it's well in advance. We already know what to expect going over the next 2 weeks, and we also know what's going to go on heading into the fall. So the timing gives us an idea of what to anticipate. The sentiment gives us the why. And what I mean by that is the majority is always going to be on the wrong side, meaning that when we are in a topping process, the majority is going to be bullish on the market and not think it's going to go down. Kind of sound familiar with where we are right now. And then the market drops. And when the market is, nearing a bottom, the majority is going to be bearish on the market. And it's just the way it is. It's the psychology of the market. It's been that way basically since we started trading. It's a herd mentality. So that gives us that backs up the timing part of it, because if the sentiment is in line with when we are expecting a reversal, that matches up on it, and then we just use our regular technicals to kind of back it, look at everything and make sure it's in line as well, meaning where is the price going to reverse. So we're using technical divergences, wave structures, patterns, and that's what I do on the short-term stuff, where in the morning notes as well as in the videos that I do each night, I give short-term patterns. So we have the bigger picture as far as what to expect through the timing part of it, but throughout that time period where we have little patterns and trading opportunities that you can take advantage during that time period. And that's what I just put in the morning notes, what I'm doing, what I'm looking to where I'm looking to do it, and whoever follows me. So like I was saying, the majority is going to be on the wrong side all the time. It's just the way it is. And going back, Woody's been mentioning this 1987 golden halo, where he said nobody was believing this market was going to go down. The Dow was making new all-time highs week in and week out, and then within a 3-week time period, we saw it lose 37% in 3 weeks. And we are in that period right now where we're not saying it's going to crash, but he's saying there's a lot of resemblance of what happened here, and we're in a time period that you have to really know when to expect this. And that's what we have in our most recent newsletter, is when to take a look and see when things are really going to start breaking down. So one of the reasons why this could bring this is now this is a the S&P chart of now, and it's a weekly chart. And the reason why something like that could play out is just strictly on a wave structure, where once we complete this wave 5 of 3, a wave 4 could bring the S&P all the way back down to the previous wave 4, and that's right around the 1800 level. So from 24 we're 2404 down to 1700 or 1800. We haven't seen that kind of drop in over 8 years. But the thing is, it's not a bear market. This is something that could happen in a 3-week time period, just like it did here. But all it's doing is making this wave 4, and it's going to be a buying opportunity for this wave 5 up. So let's get back to the Dow and all that. This is where I was telling you in the last 6 trading days, the Dow Jones is up 500 points. This is the purple is IWM. This has dropped from 144 down to 139. The blue is the Nasdaq, which you can see is nowhere near the previous highs, and then the red is the S&P, which has just basically been kind of in between everything. It's not crashing like the like the Russell. It's not making new highs like the Dow, and it's not lagging a little bit like the Nasdaq. It's just hovering here, and this is what's keeping everybody on the side of, this market's not going to go down, because they mainly follow the Dow and the S&P. But it's misleading, because when you look inside and you have the Dow that's holding everything up, what you have to know is what happens if it gives back a little bit. And I'm going to show you the, why it's important. But this is what I'm saying. Everybody is bullish on the market because they're watching the Dow and the S&P. Nobody believes this market is going to drop. And it's one of those, situations that it's going to be very, very dangerous. So this is the, Nasdaq, and in the pink right here. These are the stocks above the 50-day moving average in the green. So when the Nasdaq was going here, and we were hearing all the financial stations cheerleading about how it's never going to go down, this was my warning. I was saying, listen, there's a handful of stocks that are pushing the Nasdaq up. They have to be perfect, because if any of them start to drop, the Nasdaq is going to collapse. And this is what we saw happen on that. It had a bouncing down from there. Yes, we came back up again, but look what's happening. We're getting the same reaction where there was just a handful of stocks pushing the Nasdaq up, and that's why it's having a hard time getting higher. So that's what happens when you have just a handful of stocks that are holding the market up. But it gets worse than that. So let me show you. This is now the Dow with the same thing. It's here. The black is the Dow making new highs, and the green is the number of Dow stocks above the 50-day moving average. So there's 30 stocks in the Dow. Look at it going up here. How many stocks are above their 50-day moving average? It's on a decline here. So the internals are diverging from this 500-point move. And remember the warning sign on the Nasdaq. Once these few stocks that have driven it up here start to give way, the whole thing is going to collapse exactly like this. And that's why it's important to know exactly when these dates are that are going to be approaching. And the bad part about it is we know that sentiment, everybody's bullish, but there's really no protection. Just lately, the past couple days, we saw a little spike in the put call ratio, but the VIX and the VXX are at all-time lows right now. So there's no protection if this market does drop. And that's something that you have to be really, really concerned about, because what happens is when nobody's protected, nobody thinks the market's going to go down, and the Dow is holding things up with a select few stocks. When it does drop, this is the type of move you get. So let me show you some of the regular charts here. And this is IWM. I'm showing you this because this is a pattern. I have been short IWM. I actually just covered most of them today. And my reason why was the golden halo jump. This is off of the spiders, but I knew it was running into this resistance zone. And this is the bearish wedge that I pointed out all the time on it. And it has a target of 137.22. So I covered them. I actually got short right around the 144, and from there I covered them in the 139s. So in the past 6 days, I've loved this market. Even though the Dow has been going up and the spiders have been doing nothing, this index that I was short has been going down really hard. So why is that important? Here is the futures for the S&P. It's that same exact pattern. Here's the target all the way down at the 24.55. That's below this low right here. So the thing is, all this little holding up of the the indexes from the Dow, it's, these are the patterns that are in play, and they're not going to change. So if we take a look at the S&P, this is the pattern that I was showing you where we're in this chop zone. So once this completes, no matter whether we have that last move up and it comes down, or we already made it and this next move is going to be this to the downside, this is where once we start breaking support, remember, there's no protection in this market. Nobody thinks this market's going to go down. The majority is bullish on this market. So when it starts to drop, you get a panic sell-off, and with no protection, everybody starts running for the for the the woods, get out of the woods at once, and that's what bottlenecks everything, and from there we get crash like moves. And again, we know the dates to be watching for this, and that's the thing, you really have to be important, because we have sentiment that is backing this, we have patterns that are backing it, we have divergences that are backing it, and we also have time that is backing it. So it's going to be one of those things that in reality, it could be one of the best trading months of your year, of your lifetime, or it could be one of the most drastic ones if you stay really, really long up here and not think it's going to go down. So for the short term, the bulls need to get it above 2480. Bears need to get it through 2466. This is your guideline right here. If it goes below 2466, 2459, and more like a 2450. If it gets above 2480, watch the 2484 and possibly a spike new high that reverses. But this is not an environment that you have to be that you can be complacent with, because this thing could turn at any moment. And like Woody said, in this type of environment, when nobody's protected, when it does turn and it goes down, and if those select stocks that have been holding the Dow up turn, it's going to go down a lot faster than it's going up, and you really do have to be prepared for that. So with that, have a great night, and I'll talk to you guys next week.